Dividend investing, not a term that's highly talked about in today's day and age of massive crypto punks and NFT drops, but still one of the most legitimate ways to make reliable passive income. If you're new to this channel, my name is Krish, and in this channel, we talk about all things investing and business. In this video, I'll cover the pros and cons of starting a dividend portfolio and if it's the right move for you. I'll also talk about what to look for when you're choosing dividend stocks to invest in and to add to your portfolio. And finally, I'll show a dividend portfolio that I personally put together, and I'll analyze a few stocks I included in there and explain why I chose them. Let's get it. If you don't know what dividends are yet, they're basically profits that companies pass back to shareholders on a consistent basis. It's pretty much a thank you from a company for investing in their stock. The pros of investing in dividend stocks is they offer true passive income. A lot of times people say investments generate passive income like rental properties, but that isn't fully true. You still have to manage tenants and fix issues in rental properties. Dividends, however, are one of the few forms of true passive income. After you buy a dividend stock, you practically do nothing and you will get paid out dividend. It's essentially making money while you sleep. Dividend stocks also serve as a very good hedge against inflation. During high inflation, companies also raise their prices, increase their cash flows, and increase their dividends. Furthermore, dividend stocks tend to be far more stable. This is partially due to the fact that dividend stocks tend to be larger established blue chip stocks that already have high cash flows and high profit margins. I forget the exact statistic, but during recessions, dividend stocks tend to fall less in value than other stocks in the S&P 500 index fund. Another benefit of dividend stocks is the power of compounding. If you reinvest dividend payouts back into stocks, it can give you a compounding effect which will help grow your investment quicker. However, this leads into a few cons with investing in dividend stocks. Since most of them tend to be blue chip, large market cap stocks, it tends to limit your ability to diversify. You can't really invest in smaller cap stocks, which decrease your ability to diversify. Another con is that dividends are not guaranteed. Technically, any company could stop paying out dividends at any time, even though we don't see it happen that often. For example, Ford Motor Company cut their dividends in the early pandemic before recently resuming their payouts. However, there are a few companies that you can basically count on to continue paying their dividends, like Coca-Cola, because they've been doing it for 58 years and they have a strong business model. But nonetheless, it's important to keep in mind that dividends are not guaranteed. The last con with dividend stocks is that sometimes it inhibits the growth of companies. Since companies pay out dividends from their profits, it's taking money that the company could have invested back into growing the company. Now, for some companies, that doesn't really matter because they have such large cash flows and large cash positions like Apple. But for other companies, it could potentially hurt their growth, which is also important to keep in mind. So now let's talk about what to look for when selecting dividend stocks. The first thing I look for is their track history of paying out dividends. This is really important because you want to ensure that the company has a high likelihood of continuing to pay dividends in the future instead of cutting it like Ford and Disney did. One tool you can use to check the track history of companies is Dividend.com. You can see here that Coca-Cola has been consistently raising their dividends rates from the beginning, and they've been paying dividends for 58 years, so they're not likely to cut their dividends anytime soon in the future. The second thing you can do is to focus on the growth of the company rather than the dividend yield. A lot of times, if you focus on dividend yield, you could be hurting the potential to actually make money from the appreciation of the stock. Like we mentioned before, the higher the dividend rate, the more it could be hurting the company's growth because they're paying you the money that they could be using to reinvest in the company. So a lot of times it's better to go with a company with a lower dividend yield rate, but has a higher chance of also growing in value like Apple. One thing you could do to check how much of the income a company is using to pay out its dividends is to check what's called the dividend payout ratio. This ratio represents what percentage of net income a company is using to pay dividends. The lower the ratio, the more money the company has to reinvest in itself. For example, Apple has a dividend payout ratio of 13%, which means that they are using 13% of their income to pay dividends, which is pretty low. Since Apple's payout ratio is low, the value of the company has a much higher ability to grow, which will also make you a lot of money because the stock will grow in value whilst also giving you some dividend cash flow. These kinds of stocks are called dividend growth stocks. I definitely focus on investing in dividend growth stocks rather than just investing in stocks with high dividend yields. The last thing to look for is diversification. You want companies in different sectors and industries because you want your portfolio to be stable under all market conditions. For example, if your entire portfolio was made of real estate companies, but the real estate market crashes, your entire portfolio will likely be down as well. It's also important to try to have companies of different sizes like small caps, mid caps, and large caps, although this can be a little difficult to achieve with dividend stocks. So now let's look at the sample portfolio that I made. You can see there's a good mix of sectors ranging from financial, technology, consumer durables, and consumer non-durables. If I could do this again, I would probably add a few more stocks just to diversify a little bit more. So to break this down a little bit, I chose Apple because even though they have a low dividend yield, they can be considered a growth company. So I will probably profit a lot through the appreciation of the stock. I also added Coca-Cola in here because this is a stable company. I probably won't make a lot of money in the appreciation of the stock, but I can count on them paying out my dividends consistently. Like we mentioned before, Coca-Cola has been consistently paying their dividends for 58 years, and they have also been steadily raising their dividends over that time. Another thing to consider is that Coca-Cola is one of the more recession-proof stocks. People will likely be drinking pop and soda no matter what the economic conditions of the country are. I also chose Visa and MasterCard because these companies tend to do well with inflation. Since they charge a percentage fee on each transaction, as transaction values increase due to inflation, Visa and MasterCard will continue to get greater revenue in proportion to inflation. Both of them also have pretty low payout ratios, and I expect them to continue growing as a company, so I can make money in the appreciation of the stock as well. The last one I added to this list is Vanguard Dividend Appreciation ETF, trading under ticker VIG. I chose this ETF because it's easy, simple, and you can just buy this ETF and automatically have your money diversified over many different stocks. If you don't want to do your own research in individual dividend stocks, I would suggest investing in VIG. If you guys want to get started investing, I recommend considering investing in dividend stocks because it might be a good place for you to start and it can give you some cash flow. If you like videos about investing, stocks, and crypto and entrepreneurship, make sure to subscribe to this channel. Also, check out the link in the description of the video to get free stocks with Robinhood and join my completely free Discord community, link in bio. Also remember to follow me on TikTok and Instagram. Peace.